I hope you are all present. So welcome back from the break. Let's continue. We've had enough break to refresh ourselves, and for the last final 1 hour, let's try and maximize it. Let's use it. So from where we stopped, we will now. So I think any other that wants to join will join in the course of the class, or the course of the lecture. So we can start. So let me share my screen for where we stopped. We were talking about the position. We've talked about the straight line method. We want to talk about the reducing balance method. That's the next thing we want to do. That's the next thing we want to do. Let's hold on. Yes. Yes, I guess my screen is on now. Yes, you can see my screen. I'm going to adjust it mostly to the give me 2 seconds. I just to adjust it. So while I'm still on it, let me just try and explain what the reducing balance method is. So I said, like I said, that um there's a percentage, there's a percentage that you will apply every year, the cost of the project. So there's a percentage you apply to the project every year. So because of the percentage will be fixed for amount. So it will be different amount. It will be different amount. So at the end of the year, it will be different amount. So when I open it now, from the example we're going to do, we will know why. Thing is not showing. Thing is not showing. So I will try and everything, everything else. I think there's something else somewhere. Something else somewhere. So which is costing this. So trying to open it. Open something blank. Good. So I will display it now. I will display it now. So hmm, yeah, good. So can you see my screen? Let me know if you can see my screen. Let me know if you can see my screen so I can continue. Just indicate from the chat box if you can see my screen so I can continue. So we have the using balance method. We will talk about that. The using balance method. So as I said, that we're using balance method, if at the end of the year, there's a percentage you apply on the asset, whereby it reduces the cost of your assets. The historical cost of it reduces the historical cost of the assets. So if you're applying this method, this is how you apply it. For example, a machine costs 12,500 naira will be kept for 4 years and then sold as scrap value of 5,120. The business which is to use the reducing balance method and the rate of depreciation will be 20%. The rate of depreciation is 20%. And at the end of the fourth year, they will sell the machine at 5,120. So how do you apply this? Normally, you know that. So we are doing the reducing balancing method. Can you hear me? The reducing balance method. First of all, what's the cost? You need to know the cost. What's the cost of the machine? The cost of the machine is 12,000, 12,000, 12,500. You put the naira sign, that's the naira sign. 12,500, that's the cost of the item. Year one, now you are year one, depreciation that will be charged for one. So that will now be how much? It will be 20% of 12,500. So we can say 1,500 times 20%. 12,500 times 20%. So then what's 20% of 12,500? For those who want to know how to use Excel, what we just have to do is just press the cosine, then on 12,500 times, then put on 20%. You get your percentage, you get the amount. So it's just, that's 2,500. That's the percentage, 20% of 2,500 is 2,500. So for mine is subtracting. Just put the minus sign in part of it. It comes with the brackets. So when it comes, you are removing. So when you sum these two up, it's out of okay. So sum of it makes sense. At the end of year one, you're having 1,000 naira. That's at the end of year one. You have 10,000 naira. And it comes to year two. Mind you, you only have 4 years. Year two. Also. So do not forget that as at the end of year one, the asset has reduced to 10,000 naira. So year two, that's another time around. Now be 10,000. That is 10,000. You have bring it forward from year one, end of year one, to the beginning of year two. It's now going to be 20% of 20,000 naira this time around. 20% of 20,000 naira this time around. Okay, volume. Oh, okay. Let me clear my throat. So, let me keep my voice. Ooh. Okay. So, year two, it will now be sent the net book value for year one, the amount of the machine for year one is now 10,000 naira. Brought it forward to year two. It has been brought forward to year two. So it is now 20% charge. It is reducing balance. So 20% of 10,000 naira. So for you to be able to know how to use the result, your equal sign comes first. So because you are removing, you can put minus instantly. Then 10,000 times. So press your enter key. It goes your 2,000 naira. That's what we get. So and do the calculation here. To the difference here. The difference is 8,000 naira. As at the end of year two, the balance we have is 8,000 naira. In year three, third year, for year three, now be 8,000 times so 8,000 times 20, that's year three. So every year is 20%. But you can see that the figure has not been the same. Figure for year one is not the same figure for year two. It's not the same figure for year three. Same thing will apply to year four. So it's a reducing balance level. It's different from the baseline method that every year same amount, 700 that we move, 700 that we move also. So equal sign minus because we want to deduct from the net book value of the asset minus then click on the 6,000 naira times sign times on your keyboard. Then as the first enter is 1,600 naira. 1,600 naira. The balance figure So at the end of year 3, you are having the assets of the value now 6,400. Now 6,400. So year 4 is the final year. Um, 1,400 and then so equals minus 9,100 equals minus 9,400 times 3%. It is now 1,128. 1,128. So what will be the balance at the end of the fourth year? So we have 5,120, which happens to be the amount that will be sold as scrap. Happens to be the amount that will be sold as happens to be the amount that will be sold as scrap. Okay. So this is the amount that's now being sold as scrap. That at the end of the year, what has to sell it at 5,120. So at the end of the fourth year, so was now disposed of at this amount. So, and as we've done this, then you come straight to your machine account and you prepare same thing as this. As at year 1, the cost of it was 12,550 in the 6th year, and the depreciation is 5, which is here, you add it here, then the balancing figure, put it, and on, and that's how you just, how you post. This is how you do the account for the machine. Just same thing. All it was just there for you just to get the accurate amount, to get figures that will process, that will be, that will increase, get the accurate figure for first year. First year is 5, as you can see. 5. Second year was 2,000. Third year was 1,000. Fourth year was 1,002. So that is the for the depreciation for each year. That's the depreciation for each year. So that is for reducing balance method. That is for reducing balance method. So then there's another method, another method of depreciation also, which is called machine hour rate method. Machine hour tells you that the hour is used in operating the machine. That will let us know how much to charge as depreciation. This will let us know how much to be charged as depreciation. So looking at the machine hour, if you go to companies, factories, they run their machine all through 24/7. As they on this, they off this, they allow this to rest. They on another one, so it runs on and on and on and on and on and on. That's how it runs. So if you want to calculate the depreciation for that, you can use this method, that machine hours. They know the estimated hours that the machine will last at least. And maybe it's going to run 1,000 hours before you just pack it off. So let's use that hours of the hours the machine runs for us to determine the amount of the depreciation that will be charged. So, for an example, here's an example here. A company purchased a plant and machinery at the cost of 105,000. That's the cost of the machinery, 105,000, and the machine will run an estimated effective hour of 125,000 hours. So that is the estimated hours the machine runs. I bought it for 105,000, and it's going to run a total hour of 125,000. Thereafter, it will now be sold as scrap for 5,000. It will be sold for scrap as 5,000. So the number of hours the plant and machinery was put to use for the first 3 years, as stated below. So the first year, when the machine started running, first year it ran for 10,000 hours. Second year was 12,000 hours. And the third year was 3,000 naira. So calculate the yearly depreciation. Calculate the yearly depreciation. So how do you calculate the yearly depreciation of it? So those who are very familiar with maths, you know how to come about this. So you need to first of all know the rate. You need to know the rate. You need to know the rate per hour. Let's first of all know the rate per hour before we now begin to know how much it will now be for the 10 hours. So if you can know the rate per hour, it's just the rate per hour times the number of hours for that year. Understand? The number of hours for that year. So rate per hour. What would the rate per hour will be? So you just have a formula like the cost. That will have cost minus the scrap value, because it was sold. It was after everything, they have to be sold. Minus the scrap value. You have to minus the scrap value, then divided by the estimated last 2 hours. 2 hours. Estimated 2 hours. So that's just a formula that I'm going to use. Cost minus scrap value divided by estimated useful hours. What's the cost? The cost is 105,000 minus what is scrap value? 5,000 divided by what is the estimated useful hours? If you get in the questions, 125,000. That's the estimated useful hours that we have. Estimated useful hours. So, 24 hours. So it means that we'll be having 105 minus 5,000, that's 100,000, 100,000 divided by 125,000. So can you please give me the answer for this? What will now be your answer? 105, 100,000. I need your answer to let you know that you are here with me. I'm taking my calculator too. 500,000 divided by 1. I have my answer already, but I need your answer. I need you to give, I need answer from you. So what will be the answer per hour? So how much is now per hour? Looking at this. So how much is now per hour? Yes. Your answer from the chat room. Your answers from the chat room. Your answers from the chat room. The machine purchase. The company purchase plant and machinery at a cost of 105 with an estimated useful life effective hour of 125,000, and it will be sold at scrap value of 5,000. So how much would be the machine per hour? How much would be the machine per hour? Please, on those who are online and those who are on the call, can you please give me the answer for this? Give me the answer 100 divided by 125. 100 divided by 125. Yes. Abel, Honesty, Daniel, and Salman. Where are you guys? So give me answer for this. You don't have calculator with you. So without wasting most of our time, you have 0.8. So that would be 80 kobo. If you're having 80 kobo, if you're having, so your calculation very well, Daniel. 100 divided by 125. So for every hour, the cost will be 80 kobo. For every hour, the cost is 80 kobo. Every hour, the cost is 80 kobo. So the total cost minus scrap value is 100,000, and the machine will run for 125 hours. This is in Naira. The top one is in Naira. That's the cost of the machine, and it will run for 125,000 hours. So how much is per hour? How much is per hour? Yes, Daniel. Yeah, 0. Okay, you got it right now. So it's 0.8. 0.8. So 0.8 per hour. So how do you now do your yearly? How do you now do your yearly decision? So you know that it's now 0.8. So how do you do your yearly depreciation? We have year one. So year one, you have your what? How many hours is for year one? That's 10,000. 10,000 hours. 10,000 hours times. Times 4.8. That's 50 kobo. Times 80 kobo. What do we have? I need answers from you. Year two, we have 12,000 hours times same amount, 0.8 times 0.8. Year three also have 50,000 hours. 50,000 hours times 0.8. So what do we have? What do we have? So each, so it's what you now get, what will be charged as depreciation. Will be charged as depreciation. So year one, 10,000 hours times 0.8. What is the answer? What is the answer for that? What's the answer for year one? What's the answer? I'm waiting for your answers. So if the calculation, what's the answer? 10,000 times 0.8. Can take the calculator of your phone and do it, make it faster. Let's make it snappy because of time. So when you just, I won't put the answer on, so you give me the answer, but I will move to the next one. Let me move to the next one. So still be waiting for your answers concerning that. We need all to be together to make sure we finish do this. So okay, two answers are here. Okay. So This for year one, I guess. Daniel and Honesty. This for year one, that's 8,000 naira. 8,000 naira. So that's for year one, 8,000 naira for year one. So that is the amount of distribution for year one. So that's going to be. So when it is now, when you are recording it in year one, when you are doing your bank, your report, your financial statement, your and loss account, you just put this distribution under expenses, 6,000 naira. But when you get to your balance sheet, it will now be the difference between the amount, what amount again? The difference between 105 minus 105 minus 6,000 naira. That will be at the end of year one. This is now the value of the machine. Now the value of the machine. Okay, what about second year? Just put, if you have typed, just put second year. Okay. Okay. Yes. So second year is 9,600. Yeah, honestly, thank you. 9,600. And third year is, let me confirm the third year. We have 13,000 times 0.8, 10,400. Yeah, 10,400. Very correct, 100%. Pass mark. So this is just how to do machine hour rate method. Machine hour rate method is another method of depreciation. Also have some of the year so which you can also apply to. I think you have to have the knowledge of it also. So some of the year. So you have a machine cost 9,000, has a useful life of 3 years, after which it can be sold for 1,800 naira. Now sold for 1,800 naira. So some of the method. Of the year digit method. So we have the cost of the machine is 9,000, and it's going to be for 3 years, and after 3 years you sell it for 1,008. So let's move the 1,008 from the 9,000. So let us know I think what we're talking about. So 9,000 minus 1 give us what? It's 7,000. 7,000. So we know we'll be working on 7,000 too. So yeah. The one, first year, have 1, 2, 3. Have the 1, 2, and 3. The 1, 2, and 3. Because we want to do sum of the year. Sum of the year. So the 1, 2, 3. Sum it up. Sum it up. So when it comes to digits, so when it comes to digits, times 3, I'll start from the back, 2, 1. So this gives you a total of 6. So 3 to 1 gives you a total of 6. So how do you now start your calculation? So it will now be for first year. For first year, this year one, for this first year, we'll be having just a very simple thing. 3 divided by 6. 3 divided by 6, that's for first year. Times 7,002. What's the answer for that? The second year, we have it 2 divided by 6 times. So it's already giving me all. So 3 first year, because some of the year digits. So 3 divided by 6 times 7,002. That's for the first year. The second year, 2 divided by 6 times 7,002. And the third year, 1 divided by 1 divided by 6 times 7,002. So let's know what it is. Let's know what it is. So 3 divided by for the answers. Because of time, 3 divided by 6 times 1,002 will give us what? 3,600. That's the answer what will give us. 2 divided by 6 times 70 will give us. Yes, okay. It is sum of the year digits. Sum of the year digits. Sum the years. So because we have 3 years, first year, second year, third year. So sum 1 plus 2 plus 3. So if it's going to be 4 years, just sum 1 plus 2 plus 3 plus 4. Yes. So sum it up. What you now get will be the denominating factor. Will be that the denominating factor. While the other one. So as you are doing the first year, it will now be 3. If it's 4 years now, it will be 4 divided by 6 times 7,002. Second year will be 3 divided by it will not be even 6 again because it will sum 3 plus 2 plus 1 or plus 4. That will be 10. That will be 10. But we are doing 3 years, so it's going to be 6. That's 3 plus 2 plus 1, which is 6. So first year, 3 divided by 6 times 7. So this is the amount of the tuition you will charge for first year. The second year, you charge also 2 divided by 6 times 7,000, so 1,400. And the third year, which happens to be the final year, it will now be what? 1 divided by 6. 1 divided by 6 times 7,000. 1 divided by 6 times 7,000. 1 divided by 6 times 7,000. So you get your 1,200. 1,200. So that means since we remove the scrap value from it, the 1,008, remove it. So you just know, let's know amount we are focusing. So the summation of all this is 7,000. So that means you have already distributed within that 3 years the cost of the machine within that 3 years. So which we can now see that the total sum of at the end of the third year is now still the same 7,000. So every year, the first year, in your P&L account, you put your 3,006, and your balance sheet to be the difference between the cost price at that time minus this depreciation we put it there. The balance again, you take it, bring it forward to the second year. That the depreciation again, which is your 2004, which will go to your P&L account. And in your balance sheet, it will now be 2004 minus the amount you brought from 20 to first year, second year, the net book value of it, and on and on. And that's how you will able to do it. And that's how we continue to do it. So one more then, okay, that's for the decision. And I would also like us to look at this cash book also. So it's part of the lecture, which look at the video lecture. But I also want us to just look into it one more time again. I want us to look into this cash book, which talks about the entries, original entry, how you can prepare cash book, part of the ledger or journals, or which you need to prepare. So this is just a little class work, not because of time and not because the majority, some of us are not present. So I will have said we should work on it all together. But it's just like a few of us I can see online. Few of us I can see online. So, but let's work on this cash book for the time runs to an end. Let's work on this cash book. So we have an example. We talked about cash book in our previous lecture, that's last Saturday and everything. When I said for every debit entry, there must be a corresponding credit entry when you open a ledger. And so for all these transactions, there is another entry for it, but let us focus on cash book itself. So I will, let me see. Okay, let's now prepare it. I just want you to pay attention to cash book. So the question says, enter the following transaction in the cash account of Mr. James. Enter the following transaction in the cash account of Mr. James. Enter the following transaction in the cash account of Mr. James. So let's open Mr. James' account. So we have our cash book. We have our cash book. So I'm trying to draw the ledger. So I'm quickly work on it. Good. So the first question, so we want to draw the cash book for Mr. James. So when you're saying February 1st, that means as a January 31st, the amount when you did this cash book account, which you are doing now, you discover that the amount left with him as in cash in his hand is 3,000 naira. The amount left with him as at the end of January, which is now bringing forward to February, is 3,000 naira. So everyone, so you have your balance. Have your balance brought down. You can see balance brought forward, balance brought down, brought forward. So we have 3,000 naira. 3,000 naira as the balance brought forward. Which is another sign. Another sign. So let me start from this one. Balance 3,000 naira. 3,000 naira. So, then February 2. So as I said, since the money is within, so Naira cash has increased in value. And let me not say increase in value. The Naira account has increased, has received something, 3,000 naira. That is why it's on the debit side of it. If money is going out, it will be at the credit side. If money is coming in, it will be at the debit side. Brought down. BD means brought down. Balance brought down. Balance brought down. Balance brought down. So balance brought down. So in short, you just put balance or brought forward. So there's money coming in. That's why it is at the debit side. So the second one is February 2. Take cash to Sheldon. Means obviously going up. Cash is reducing. So we put Sheldon, how much? 500 naira. Even 500 naira. 500 naira. So money is going up. That's where it will be. So the next one is February 4th. Cash sales. So when you see cash sales, it means when you sold, money is coming in. It means coming in. So February 4th, you have your cash sales, you have your sales. Because money is coming in, you got the debit side. How much is it? 1,000 naira. That's where it's going to be. February 6th, cash purchases. So it's what an opposite. Cash sales, money is coming in. Cash purchases, and money is going out. You are purchasing something. So money will reduce. Money you have to will surely reduce. The money you have to will surely reduce. That's February 6th. Purchases. Purchases around 1,500 naira. 1,500 naira. So also February 7th, around 4 stationery. So it means when you are buying stationery, it means that it's going to reduce. The money we see is going to reduce because you are buying stationery. That means the stationery value is increasing, while your cash is reducing. That tells you that you are now going to what? Debit your stationery and credit your cash if you are doing. Debit your stationery and credit your cash. Simply this purchases, debit your purchases and credit your cash for stationery. So debit your stationery and cash now, credit your cash with stationery. Which is 100, which is 100 naira. Next one, paid insurance. So paid insurance means your insurance will increase in value, which is insurance, and your cash will reduce because you are paying. So February 8th, insurance, credit your cash, and debit your insurance. 100 naira. And the next one says paid wages, since it applies to expenses. So which one the 10? On the 10, paid wages. Paid wages 5. Paid wages 500 naira. 500 naira. And on the top, the last thing, another cash sales. Cash sales. So when you sell, that means your sales will reduce in value because you are selling. Sales will reduce in value. Sales will reduce in value. So it's 100 naira. So now do the total. So now know the amount of cash you have as at the end of February. The amount of cash you now have as at the end of February. The summation of these summation 4,006. By the summation of these 3,002. So 3,002. So if this is 4,006, so we need to balance it 4,000. You now have the difference, which will now be the balance carried down. Balance carried down at the end of February. At the end of February, what will you now be having? 32 minus 46. 32 minus 46. That's 46 minus 32. So we have it 1,400. 1,400. So 1,400 is now the cash you have with you that you now take it forward to March. Start March. Start March. So that is what we now have. To start March. So, and even at all, if you are taking it for a balance, so you know, at least that is in the credit side here, you now bring it here to start the new month with that amount, that balance from down or forward, which is after 1,000 on which is now 1,600 naira. So you now start the February, get all the transactions, get the February. 1,400 is the difference between all these expenses. So if all this money comes into your account or to you, it's 4,006, and you've expended 50 total years 50. Out of 46 you have, you've earned the money you got from January that was less 50, and the things you made, 46, everything, and you made all these expenses, you keep saving 500, you purchase something 15. Stationery, you bought stationery 100 naira, you paid insurance, you paid with 100 and 500 respectively. How much will now be left with you? How much will be left in your pocket? And it is now for 1,400. That is the amount now left in your pocket. So this is the amount that you now carry forward. If you are continuing the transaction for the following month, it's going to be February and March. That's what you carry forward. Or better still, if you are preparing your trial balance, this is the amount that will go to that trial balance. If you want to prepare trial balance, you want to pay fee and nail and everything, this is the amount that will go there. As you can see, it's on the debit side. Same way it's going to be on the debit side also. Be on the debit side of your trial balance. Same way it's going to be at the debit side of your trial balance. Just take note of this. Just take note of any other question. So I would like you to go through the lecture classes, the video classes, and take out some textbooks again, do practice, then you will get to know more and more about it. You get to know more and more about it. So go through the lecture classes, then you understand it even better and better. And if any other further questions, I hope I get the facilitators and the rest, they know how to do one or two things so that we'll talk more concerning it. I hope we've all gotten, all gained something. Since last Saturday we started looking at our curriculum, all those things we've been talking about. I hope we have learned a lot. So I wish you best of luck in your future endeavor. Try and read and learn further to know more about this. Counting is very interesting. It's very interesting. It's something that you will enjoy. So yes, you just have to watch the video to be able to get completed. So if I have the opportunity again to come again, so to explain further again, and so we continue we continue to learn and to learn and to live and become champion, and be good at what we all do. So Mercy, you take over.
Yes. Thank you so much, Mr. Samuel. Thank you. I don't know if anyone has a question to ask. So feel free to ask your question.
Thank you too, honestly. Okay. I'll work on it. So I'll make sure I change it to PDF. I'll have to arrange it very well. Then I will put it in a PDF format. Then I'll send it, so you will get it. So I have to take my time.
Okay. Okay, once again, thank you, Mr. Samuel. Thank you, students, for your time. And for the rest of us who have not yet registered, please kindly do so. We've extended a bit for 1 week again, so feel free to register. Tell your loved ones about this program. Tell them to register as well. And if you still have outstanding, for those of us that are yet to pay our acceptance fee, please do so as well. Okay, Honesty, we are going to drop the link for the registration in the group. So you get to register from there. So if you're here to pay your acceptance fee, please kindly do so. And then rewatch again and again so you could understand very well because exams is coming up soon. So you also have to know that. Have that in mind. Previous lessons too is also uploaded on our YouTube channel. So feel free to go and watch. Please engage us on all of our social media platforms, on LinkedIn, subscribe to our YouTube channel, like, share, and mention us on Facebook, Instagram, Twitter, which is now X. Thank you so much, everyone. We believe it's going to be a very impactful learning. Thank you so much for your time. Do have a beautiful weekend and see you next week by God's grace.